Hello, I'm Luca Moneta, Senior Economist for Emerging Markets and Country Risk at Allianz Trade. Today, I'd like to walk you through our Global Economic Outlook Q3 2025 with a special focus on Brazil, Latin America, and emerging markets. Starting with Brazil, despite global uncertainties, the country's outlook remains relatively resilient. We expect GDP to grow by 2.3% in 2025, followed by 2.2% in both 2026 and 2027. Inflation is also on a gradual downward path, from 5.3% in 2025, easing to 4.3% in 2026, and converging towards today's central bank's target at 3% in 2027. Still, Brazil is not immune to global trade tensions. Rising trade costs and export losses are trimming about 0.4 percentage points from GDP in 2025 and another 0.2 percentage points in 2026, slightly less than the regional average, but with significant differences depending on products and exemptions. While the number may sound small, it shows the effects of fragmentation and protectionism and could bring economic growth back below the regional average in 2026, as well as revive unemployment. The challenge for Brazil is clear: balancing stable domestic demand with external shocks. Looking across Latin America, the region remains vulnerable. Most countries are still expanding, but with higher current account deficits and growing debt burdens. They are sensitive to global risk-off episodes. Along with Brazil, Argentina, Colombia, and Mexico are among those requiring close monitoring. An important point is fiscal policy. More than half of emerging markets are currently loosening fiscal policy, increasing spending to support growth. In the short term, this cushions domestic demand, as it has been the case for Brazil, but it also raises vulnerabilities if external financing conditions tighten and fuels domestic inflation in the long run. For investors and companies, that means more volatility in exchange rates, borrowing costs, and overall confidence. In emerging markets at large, growth is holding up at 3.7% in 2025, but is expected to slow to 3.5% in 2026. The good news is that inflation is largely contained, allowing many central banks to cut rates together with developed economies, which means that corporate financing costs shouldn't increase comparatively. But imbalances are building. China, for example, is expected to slow from around 5% in 2025 to just above 4% in 2026, as exports contract and domestic demand stays soft. This matters for Brazil and Latin America in general, given their trade links with China and the importance of additional demand from the other side of the Pacific. And there's another important point for South America. Between 2025 and 2026, the region faces a major electoral cycle, with large economies such as Argentina, Brazil, Chile, and Colombia holding elections, which can have significant macroeconomic repercussions and increase tensions, potentially interfering with logistics and investment confidence. Zooming out to the global stage, three themes stand out. First, trade fragmentation and tariffs. Global trade of goods and services is expected to slow from 2% in 2025 to just 0.6% in 2026. Recent US tariff hikes are a key factor. They don't only affect US imports, they cause ripples across supply chains. Our estimates show that of $4 of additional tariff costs, 3 are passed on to exporters and consumers through squeezed margins and higher prices. Second, stagflation light. Growth is stuck at 2.6% globally in both 2025 and 2026, while inflation remains elevated around 3.6-3.9%. It's not a deep crisis, but it's enough to keep pressure on households and businesses. Third, financial stress. High financing costs will continue to challenge firms, and insolvencies are projected to rise 6% in 2025 and 4% in 2026. All this confirms that businesses worldwide, and especially in emerging markets, need to prepare for slower growth, higher costs, and more volatility. At Allianz Trade, our role is to help companies navigate this uncertainty, protecting receivables, managing risks, and supporting strategic growth both locally and abroad. Thank you for watching, and stay tuned for more insights.